Opendoor closed out Friday's trading session on a positive note, finishing the day at $4.45 per share, an increase of 18 cents, or just over 4%. That might not sound like fireworks compared to some of the huge moves we've seen in this stock lately, but in the context of a broader market that was down, it's a very encouraging sign. It tells us that while other stocks were struggling, Opendoor still had buyers stepping in, still had momentum behind it, and still had a story that investors were willing to put money into. The day itself was interesting to watch. Early on, Opendoor surged all the way up to $4.93. That was close to retesting that psychological $5 mark that has become the ceiling we've been talking about all week. But just like we've seen before, the stock couldn't quite hold those levels. It came back down and then spent most of the day bouncing around in the $4.25 to $4.45 range. So what we ended up with was not a breakout to $5, but also not a breakdown. Instead, we got consolidation, and consolidation at higher levels is always a healthy sign. I think the key factor driving today's trade was something that actually happened yesterday: interim CEO Shrisha Radhakrishna putting his own money into the stock. That insider purchase at the end of Thursday's session sent a strong message. And today's action shows that message was baked into the stock's behavior. It gave investors confidence. Even as the wider market fell, Opendoor was able to close higher because people believe in the signal that came from that purchase. Insider buying is one of the strongest bullish signals you can get. When the people running a company are willing to use their own cash to buy shares, it tells you they believe in the business. They know more than anyone else about what's going on behind the scenes. They know the risks, they know the challenges, and they also know the opportunities. If they're buying, it usually means they see value. And for retail investors, that kind of alignment is reassuring. It's the difference between hearing corporate jargon and seeing actual conviction. What I like about Shrisha's approach is that he seems to be balancing his corporate responsibilities with the retail energy surrounding this stock. As interim CEO, he has to run the business properly, meet legal standards, and protect shareholder value. But he's also leaning into the retail movement. He's been active on X, he's been responding to comments, and now he's buying stock himself. That's a powerful combination. It shows he respects the retail crowd, but is not doing it recklessly. He's threading the needle, and that gives me good vibes about his leadership. Now let's talk about the board, because this has been a big topic of conversation online. For weeks, investors have been saying the board isn't doing enough, that it feels inactive, that there's a lack of transparency. But now the vibe seems to be shifting. Shrisha's purchase and his comments that other board members will also invest soon show a board that is listening, that is engaging, and that is willing to act. On top of that, there's speculation about possible changes to the board itself. Keith Rabois' name keeps coming up, with chatter about him potentially rejoining. Keith was one of the original visionaries behind Opendoor, and his return would be seen as a strong vote of confidence in the company's direction. There's also been some cryptic messaging from Eric Jackson on X, leading some to wonder whether he might take a more formal role as well. Now, none of this has been confirmed, so we should treat it as speculation. But the fact that investors are even talking about these possibilities speaks to a growing sense that something is happening behind the scenes. The retail hive mind has a way of sensing when change is in the air, and right now the vibe is that board changes are coming. If that does happen, if Keith Rabois or someone of similar stature rejoined, or if Eric Jackson found a way to be formally involved, it would be a huge sentiment shift. It would signal that the company is not just engaging retail through tweets, but actually restructuring itself to align with that energy. That could be a game changer in terms of investor confidence. Another interesting thread that came up today was the idea of Opendoor spending more on Google Ads. Retail investors pointed out that Opendoor doesn't rank highly in search results, and that even a modest investment in digital advertising could make a big difference. It's a small suggestion, but it's worth highlighting because it shows the kind of ideas retail investors are contributing. This isn't just a meme crowd shouting about price targets. These are engaged shareholders thinking about practical ways the company can improve. That's valuable feedback, and it reinforces the idea of retail as a decentralized hedge fund, loosely coordinated, but collectively very smart. So what does all of this mean heading into the weekend? For me, it's about confidence. The insider buy gave confidence. The prospect of more board members investing gives confidence. The speculation about board changes gives confidence. And the stock itself, holding above $4 and closing green on a down market day, also gives confidence. Technically, we're still looking at the same levels. $4 is the support, $5 is the ceiling. That hasn't changed. But what has changed is the energy around the story. We're no longer talking about a board that's inactive. We're talking about a board that's buying. We're talking about leadership that's engaging. We're talking about potential changes that could bring in big names. That shift in tone matters. From a longer-term perspective, the same drivers remain in place. The CEO search is ongoing, and the permanent appointment will be a major catalyst. The pivot to an asset-light model is critical for scaling sustainably. The integration of AI through tools like Repair Copilot and Risk AI is part of building efficiency. And the broader housing market, which could get a boost from rate cuts later this year, remains a macro tailwind. Put those together and you have a strong foundation for growth. But in the short term, it's all about momentum and sentiment. And right now, both are leaning positive. The insider buy was a spark, and it seems to have set up the potential for more buying, more alignment, and more confidence. That's exactly what this stock needed heading into the weekend. So as we wrap up Friday's trade, here's my takeaway. Opendoor isn't just drifting anymore. It's making moves. It's building trust. It's showing signs of a board and leadership that are paying attention. And the stock is responding. If this momentum carries into next week, a retest of $5 is back on the table. But more importantly, the groundwork for longer-term success is being laid. That's why I remain bullish. Not because of one insider buy or one green day, but because of the trajectory. Because of the alignment forming between leadership and retail. Because of the potential for meaningful board changes. And because of the strategic vision of becoming not just an iBuyer, but a true real estate platform. Friday's close wasn't just another tick on the chart, it was a sign of progress. And progress is what builds conviction. As we head into the weekend, I feel more confident than ever that Opendoor is on the right path. The volatility will continue, no doubt. But the story is evolving in a positive direction, and that's what matters most.